Well, today we will discuss an interesting product, an interesting policy called electric bike, e-bike insurance. You know, electrical vehicles are becoming very popular nowadays in all segments. So, let's understand what electric bike insurance is. If we talk of electric bike insurance, this is a vehicle type, is a two-wheeler, non-registered electrical vehicles which have the battery capacity up to 0.25 kilowatt. Maximum speed is up to 25 km per hour, and the vehicle weight, excluding battery weight, is up to 60 kg. So these are the basic necessities. Now, what coverage is there for e-vehicles? So minimum two sections are required. First section is mandatory, and 9 sections are there in the policy. What these 9 sections are? 1. Loss or damage to the vehicle insured, that is OD loss. Second, liability to third parties. Third, personal accident cover for owner driver. Fourth, nil depreciation. Fifth, consumable. Sixth, return to invoice. Seventh, hospital daily cash allowance. Eighth, daily expenses reimbursement. And 9, personal belongings. Listen again. Section 1 is mandatory, that is loss of or damage to the vehicle insured, that is OD loss. Minimum 2 sections are required. Total 9 sections are there in the policy. Now, what is the section 1, which is mandatory? Loss of or damage to the vehicle insured. It covers only OD part. Sum insured is IDV, insured declared value as per the vehicle age. And you know there is a IDV table for that purpose. Deductibles would be in case of partial loss, 5% of the claim amount subject to a minimum of ₹500. But in case of total loss, 5% of the claim amount subject to a minimum of ₹1,000 only. Main exclusions of the policy are no theft cover of a standalone battery, and for this vehicle there is no LCB slab. So I highlight the special features again. Listen carefully. This section, that is loss of or damage to the vehicle insured, is a mandatory section. It covers only the own damage loss. Sum insured is IDV, insured declared value as per the vehicle age. Deductibles in case of partial loss, 5% of the claim amount subject to a minimum of ₹500. In case of total loss, 5% of the claim amount subject to minimum ₹1,000. This policy does not provide theft cover for a standalone battery, and there are no NCB slabs. Coming to section 2, that is liability to third party. This section is an optional section, but under this third party cover, legal liability to third party for bodily injury and property damage is provided. Liability to third party for bodily injury and property damage is covered under this section. Among the deductibles, in case of partial loss, 5% of the claim amount subject to a minimum of ₹500 is there. And in case of total loss, 5% of the claim amount subject to minimum of ₹1,000 is there. Mandate These compulsory deductible are also applicable to the section 2, that is liability to third parties. Normally in motor policies you will find the deductibles are applicable to section 1, that is own damage cover only. Here in section 2 also they are applicable. Section 3, personal accident cover for owner driver. This is again an optional cover. Under this section, owner of the vehicle is covered only. And sum insured available is 1 lakh to 15 lakh and multiple of 1 lakh. In case of crime, sum insured is payable. In case of death of the owner of the vehicle, 100%. Loss of 2 limb or sight of 2 eyes or 1 limb and 1 eye, 100%. Loss of 1 limb or sight of 1 eye is 50%. But in case of permanent total disablement from injuries other than named above, 100% will be paid. This section does not cover the intentional self-injury, suicide or attempted suicide, physical defect or infirmity, or an accident happening while such person is under the influence of intoxicating liquor or drugs. So these two exclusions are applicable to this PA section, because this personal accident cover is for owner driver, means owner who is driving the vehicle. Section 4 stands for nil depreciation. This is again an optional cover. Nil depreciation claims payable during the policy period are only 2. Means twice a nil depreciation claim can be paid. On transfer of vehicle, this nil depreciation cover will cease, and there will be no refund on transfer of vehicle of premium. If the vehicle is transferred, there will be no refund of premium. This nil depreciation cover is available up to vehicles of the age of 5 years. Means from 1 to 5 years. Main exclusion of this section is loss or damage to tires or battery of the insured vehicle. If there is loss to the tires or batteries, this nil depreciation will not apply. Next section is consumable, that is section 5. This is again an optional section of the policy. If the customer wants, he can select. During the policy period, 2 claims can be paid under this section of consumables. If the vehicle is transferred, this cover will cease. And on transfer, there will be no refund of premium. This cover is available up to the 5 years from the date of purchase. And main exclusions of this section are any claim where an opportunity is not given to insurance company to inspect the damage or loss before commencement of repair. So this is section 5, that is consumable. Section 6 is return to invoice. This return to invoice section is again an optional section. But this return to invoice can be selected by the first owner of vehicle only, because this cover is available for new vehicles up to 1 year only. If the vehicle is transferred, then the cover will cease and there will be no refund of fee. So this return to invoice section will exclude If the vehicle is recovered within 90 days of the theft unless final investigation report or non-traceable report is submitted. What is excluded? If the vehicle is recovered within 90 days of the theft unless final investigation report or non-traceable report is submitted, that risk will not be covered. This cover is not available for imported vehicles, that is fully built up units imported from overseas. This is not for them. The next section is hospital daily cash. Now this hospital daily cash is again an optional cover. But under this section, the benefit payable is rupees 1500 per day of hospitalization for maximum up to 30 days. Means if the insured is hospitalized, he will get 1500 rupees per day up to 30 days. If the hospitalization is for more than 30 days, the maximum payable will be 1500 into 30. This hospitalization daily cash covers if the insured or any covered occupant suffering from an accidental injury involving the insured vehicle leading to hospitalization as an inpatient of minimum 24 hours, then only this will pay. One claim is payable during the policy period, but the limit would be 30 days maximum. The claim would be paid after the discharge of hospital and on submission of bills and admission papers. No claim if hospitalization will be less than 24 hours under this hospital daily cash is there. Means 1 day's hospitalization, that is minimum 24 hours hospitalization is required. Section 8 is daily expenses reimbursement. This is again an optional cover. The risk covered under this section is it enables insured to meet the cost of hired transport to reduce inconvenience if insured vehicle is damaged by a peril covered. And the sum insured has three options: 300 rupees, 400 rupees and 500 rupees. So what are the benefit payable under this daily expenses reimbursement system? Benefit payable are maximum 5 days in excess of 3 days. Means the vehicle is laid up at workshop for 8 days. Then 5 days benefit is payable. Secondly, in case of theft or total loss claim of the vehicle, the allowance is available up to 10 days in excess of 1 day. So these are the two benefits available under this section. And day count will be from loss assessment date to vehicle delivery date from workshop. But this section will not cover the claim where the vehicle is not repaired on the insurer's authorized workshop. So this daily expenses reimbursement limit has three options of sums insured: 300 rupees per day, 400 rupees per day, 500 rupees per day. Now the last section is personal belonging. This is again an optional cover. Here personal belonging for the purpose of this section means items such as clothes and other articles of personal nature are there. For this section, sum insured is 500 rupees to 10,000 multiple of 500 rupees. But on transfer of vehicle, the cover will cease and there will be no refund of premium. On each claim, there will be an excess that the insured will bear 10% of the limit of indemnity selected, subject to minimum of rupees 100 in each and every claim. Normally, loss excludes money, security, check, bank draft, credit or debit cards, jewelry, lens, glasses, travel tickets, watches, valuable manuscripts, paintings, electronic equipment such as cellular phone, data and photographic, audio, video and telecommunications equipment and items of similar nature. That means personal belonging cover has the sum insured limit of 500 to 10,000 in multiples of 500 rupees. It covers the personal belonging for the purpose of this section means items such as clothes and other articles of personal nature. And there is a long list of the items which are not covered. Now premium rates are also decided for every section separately. These rates are according to the sum insured selected. Discounts and loadings is also provided. Means loyalty discount is there. If the 2 or more vehicles are insured with the insurer, same insurer. Claim free discount is there. A special discount is there for specially designed modified vehicles. And direct discount. This policy can be cancelled on request of insured. In that case, premium will be refunded. If the insurance company is cancelling the policy, then premium will be refunded on pro rata basis. On the request of insured, the premium is refunded on the short period scale basis. In case of any claim, first of all, the insured is supposed to intimate the insurance company because immediately if the intimation is there, insurance company will register the claim. Wherever the physical inspection is required, the insurance company will arrange the physical inspection. And the report is required, the report will be there. On that basis only the claim will be settled. So under this policy, only two-wheelers which are non-registered electrical vehicles are covered. For registered electrical vehicles, motor policy is already there. All registered electrical vehicles are insurable under the two-wheeler motor insurance policy. But if those vehicles are not registered, for them only this specific electric bike or e-bike insurance policy is there. Under this policy, battery capacity up to 0.25 kilowatt should be or should not be more than this. Maximum speed of the vehicle should not be more than 25 kilometers per hour. And vehicle weight should not be more than 60 kilograms. So this is good for the insured because they have got the feasibility to choose the sections required as per their requirement. Because the policy provides 9 sections. And in the 9 sections, only section 1 is mandatory and minimum 2 sections are required only. But among the 9 sections, most of the sections are good to select because they relate to the personal requirements like personal accident cover, nil depreciation, consumables, return to invoice, hospital daily cash allowance, daily expenses reimbursement or personal belongings. Most useful sections are there. But that section 1 that is mandatory is only for the loss or damage to the vehicle insured. Because if the e-bike is damaged or there is partial loss or total loss, that will be covered under this policy. So, partial loss of vehicle, total loss of theft is also covered. In the exclusion, there is only the theft of battery is not covered. If there is a standalone battery is stolen, that is not covered. And on this policy, there is no system of NCVC. So this is one very good policy, because this covers the liability on the same pattern of motor insurance policy. Reason being, liability to third party section is also there, which is also providing the legal liability to third party for bodily injury and property damage. And for the safety of the vehicle, that loss or damage to the vehicle section is there, which is also providing the coverage for the partial loss or total losses of the vehicle. This section is mandatory, of course, but liability section is not mandatory in this policy, because this is not coming under the purview of Motor Vehicle Act 1988. Only the vehicles which are registered with the RTO are governed by the Motor Vehicle Act 1988. Here on this policy, the provisions of India Motor Tariff are also not applicable, because this is not a motor insurance policy. But the policy is designed in such a manner that it suits to all the requirements of the customer, because not only the own damage section, not only the third party section, many sections are there, and they all have their own specific limits. Like the personal accident cover for owner driver have the limit from 1 lakh to 15 lakh. So insured can select the sum insured according to a choice up to 15 lakh in multiple of 1 lakh. PA cover is very important when the bike is there, because bike will fly on the public place. There is every possibility that the damage to the bike, loss or damage to the public, or even any injury, death or disability to the owner cum driver is there. Because nobody can avoid the accidents. Accidents are inevitable, not because of our fault. There are multiple circumstances on the roads. Not necessarily a vehicle is hit by another vehicle. Accident could be in any manner. So if the vehicle is not registered with the RTO, no company will insure that vehicle under the motor insurance policy. If there is no motor policy and the vehicle is running on the public place, of course the provision of Motor Vehicle Act 1988 will not apply. Simultaneously, the provisions of Motor Tariff, India Motor Tariff will also not apply. But in case of loss or damage to the vehicle or to the third party or to the owner himself, the compensation is required. So to cover all these risks, in addition to certain optional risks, which normally comes in the shape of the add-on covers, they are all here as the part of the policy. Insurer is also providing the feasibility to choose the sections as per the premium paying capacity and the requirement. So the feasibility is there. Policy is good in the sense, if the e-bike is not registered with the RTO, it will not run on the public place without insurance, because this policy will insure the risk. But one more aspect is there. This insurance of e-bike is not mandatory under the provisions of India Motor Vehicle Act 1988. So neither the Act nor the tariff will govern this policy. This is a non-motor section. Here this policy is designed in a different manner. You can say this is a tailor-made policy. suitable to the requirement of customers or suitable to the requirement of owners of e-bikes, because whatever cover they need, that coverage has been included in this policy. So this is all about this insurance policy. Any questions? Okay, thank you very much.